Hey guys, this is the Essential Beginner's Guide to Japanese Candlestick Charts. Now, whenever I first started trading, I was using a line chart because I felt too confused by candlestick charts. It looked overly complex and not something that I needed. But what I didn't know is that the majority of investors use candlestick charts because it's the best representation of a stock's price over time. And why that's important is because whenever you have good data, you can find signals and patterns and use that to help assist your trading strategy. So I want you guys to know, let's watch this video. I've made it just for you so that by the end of the video, you'll know exactly what a candlestick chart is and you'll have the foundation to start learning more to make your investing life so much easier. This is a basic candlestick. The larger portion in the middle is called the body. There's also a thin line on the top and the bottom that we call the wick or the shadow. The two have different names. The top portion is referred to as the upper wick, while the bottom portion is called the lower wick. Green candles are often referred to as bullish candles because they indicate upwards price movement, while red candles are referred to as bearish candles and indicate price movement downwards. Now let's see a real example of how a candlestick would work. Let's assume that the price of a stock is currently $1. You'll notice the dash directly next to the $1 mark. Also note that this chart will cover 1 minute of price action. The point that it begins is the open price, also called the open. Over the course of the minute, the price increases from $1 to $1.15. The open portion of the candle remains the same place, while the upper end of the candle went up to meet the current price of the stock. However, during that same minute, the price decreased from $1.15 down to $1.05. Notice that the body of the candlestick dropped. However, the wick remained at $1.15, showing that the stock had at one point during that 1 minute period hit the $1.15 mark. The body of the candle, however, remains at $1.05 to show its current price. If this concluded the single minute, we would call this point at the $1.05 mark the close. You as a viewer would be able to look at this candle, know exactly where the stock opened, how high it went, and where the price closed during that 1 minute period. The candlestick is also green, indicating that the price moved upwards during the period. The bottom portion of the candle would be called the low, and in this instance, the low is at the same point as the open. Let's say something different occurred. The price dropped from its high of $1.15 and fell all the way to 95 cents during the minute. Notice that the candle turns red as soon as the price moves past the open point. This bearish candle indicates that price action has fallen during the given period. In this specific instance, the close would be at 95 cents. This would also coincide with the low of the candlestick for this given period. If during the 1 minute time frame, the price goes as high as $1.15 and as low as 95 cents, but recovers up to $1, the open and the close would be in the same location, and a white doji candle would remain. We'll get into what a doji is later. In another instance, if the price closed at $1.05, the candle would remain bullish, but you would see the high at $1.15, the low at 95 cents, and you would note that price action fluctuated wildly during this period. Now, before I tell you guys how a candlestick works in a chart, I'd really like if you guys would hit the like button. And if you're enjoying this content, consider subscribing. I try and pump out videos about investment basics and financial basics so that you guys will have a better foundation going forward. So consider liking, subscribing. Let's go. This is a typical stock chart. The bottom of the chart, or the x-axis, represents a change in time. For this example, the chart will record a stock's price in 5-minute time intervals. The length of the time for this chart ranges from 1 to 125. The right side of the chart, or the y-axis, measures the stock's price. Prices on this chart will range from $5 to $5.25, ascending in order with the lowest value being at the bottom of the chart. The first candle is a red or bearish candle, indicating that the price dropped during this time period. The top of the candle body at $5.15 indicates where the price opened. The lower wick of the candle indicates that price fell to as low as $5.05 before eventually closing at $5.10. This candle shows the complete price movement experienced between 1 and 105. The second candlestick is also bearish and details the time frame between 105 and 110. Notice that this candle is only a body with no upper or lower wicks. Because this is a red bearish candle, the open is at the top, 510, which was also the high mark during the time period, and the bottom was the close, 5, which was also the low of the time period. Overall, the two candles indicate a stock price in decline over 10 minutes, with a high of 515 and a low of 5. The next candlestick looks incredibly unique. It indicates the price movement between 110 and 115. This candle is commonly called a doji. Notice the lack of a body with an upper and lower wick. The open and close of this time period ended on the same price value, resulting in a candle with no body. Although there was price movement during this period, the upper wick indicates a high of $5.05, with the lower wick indicating a low below $5. As I'll mention later, a doji indicates indecision in a stock price and can prelude a potential reversal in price. This is confirmed with the next candlestick, which is a green or bullish candlestick, indicating upward price movement during the 115 to 120 time frame. The open of this bullish candle was $5 and increased to as high as $5.15 before closing at $5.10. In this situation, the doji did indicate a reversal in price action. It also shows that price declined again once reaching $5.15. This bullish candle details more upward price movement between 120 and 125, with the candle opening at $5.10 and closing at $5.15. The upper wick indicates a high price during the time period of $5.25. The last candle of this example is bearish, indicating a decline in price during the last recorded 5-minute time frame. The open is at $5.15 and the close is at $5.05. The upper wick details that price had a high of $5.25. Now, overall, this candlestick chart tells a very detailed story of a stock's price movement over a 30-minute time frame, with each candlestick detailing price movement over 5 specific minutes. Not only does it tell you the open and closing price of a stock during each individual time period, it also reports the high price and the low price. Now I'm going to show you a comparison of this exact time frame scenario, but detailed on a line chart. Line charts only detail the closing price of a stock at the end of the indicated time period, and while a viewer could still see the general movement of a stock over the time period, the lack of detail is obvious and doesn't convey the full story. If you were using a line chart, you would not have known that price increased during the first time period. You would have also missed that price fell below $5 during this time period. The line chart would lead you to believe that price struggled to get over $5.15 when in reality, it went as high as $5.25 and found resistance there twice. As you can see, the information that a candlestick chart gives you is much more detailed and accurate to you as an investor. This is already reason enough to use a candlestick chart in general for your information. However, the real place where candlesticks shine is in analysis and pattern recognition, especially for those who want to maximize their entry and exit points while trading. Now look, there's a large amount of patterns and terms to learn if you want to become a master at candlestick charts, and I'll include a link below for more information for those of you who want to dive in. But right now, I'm only going to give you a few of the more popular patterns that you should know, starting with single candlestick patterns. First, the doji. I've already mentioned this candle twice in this video. This is when the open and close price are virtually equal, and the candle itself appears to look like a cross or a plus sign. A doji candle can often indicate a trend reversal, but is better at informing you that there's indecision in the market where buyers and sellers are at odds. Use the greater price context when making an investment decision while using a doji. The second indicator is called the hammer. This candle has a small body and a long lower wick and is specifically located at the bottom of a downtrend. It is bullish in nature and indicates a potential reversal in price. If a hammer is green, meaning the closing price was higher than the opening price, it is considered to be a strong bullish indicator. A red hammer, meaning the closing price was lower than the open, is still considered bullish but is much weaker. Thirdly, the hanging man. This candle is when the open and close are roughly the same, and the candle has a long lower wick. It also requires the candle to occur at the top of an uptrend. It is bearish in nature and indicates a potential reversal. If this candle is red, it is considered strongly bearish. If it's green, it's still considered bearish but is much weaker. Lastly, let's talk about multiple candlestick patterns. All 3 of these that I'm about to show you indicate potential reversals in price action. The first is one of the most used indicators in candlestick charts as a whole. These are called engulfing patterns. There are both bullish and bearish forms. A bullish engulfing candlestick pattern occurs at the end of a downtrend. It consists of two candles, with the first candle having a relatively small body and short wicks. The second candle, on the other hand, has longer wicks and the real body that engulfs the body of the previous candle. As seen in the example, the second candle completely overwhelms the prior candle. For a pattern to qualify as bullish engulfing, the high of the second candle should hit higher prices than the high of the prior candle. The bearish candlestick pattern follows the same line of thought. The only difference is that this is a bearish reversal pattern that occurs at the top of an uptrend. The first candle is a bullish candle that signals the continuation of an uptrend before the appearance of a powerful bearish candle that completely shuts down the prior candle. The second pattern is called a morning star and indicates a reversal from bearish to bullish. A morning star is a visual pattern, so there are no particular calculations to perform. A morning star is a 3-candle pattern with the low point on the second candle. However, the low point is only apparent after the close of the third candle, so it can be particularly useful when waiting for confirmation to make your entry point. The last pattern we'll look at is the evening star. Similar but opposite of the morning star, that indicates a reversal from bullish to bearish. It is a candlestick pattern consisting of 3 candles, a large bullish candlestick, a small-bodied candle, and a bearish candle. Once again, it's most useful when waiting for confirmation of a reversal to mark your entry point. Now, I want you to know that none of these signals and patterns are 100% accurate. However, they are patterns that can increase your chances in making a successful trade. And guys, I want you to know that this is just the beginning of your understanding of this concept. It's not that hard. Now you know. What's important though is I gave you a couple signals and patterns that people use, but there's so much more. So what I'm going to do is I'm going to include a link below to give you further reading if you're more interested. I'm going to try and make a future video about a lot more patterns and signals that you can use from a candlestick chart. Remember that there's no perfect way to predict how a stock is going to move. However, with candlesticks, you have a much higher likelihood of things working out. Thanks for watching. If you enjoyed the video, please give me a thumbs up. It helps me a ton. Also, consider subscribing. I'm going to keep pumping out content that's similar to this, so I really appreciate it. If you have any questions, please leave a comment below. I think I'm pretty good at getting to those quickly, but feel free to also provide me any signals or patterns that you guys have found most effective in your strategies. I'd love to know. Thanks guys, I appreciate it. Thanks for watching, and don't be afraid to ask.